Hello and welcome to this video. How to trade your equity curve to make more money. What I'm going to show you today is a method that you can use and a method that I use in which you can make more money essentially by reducing losses. Whether you're a mechanical or algorithmic trader, a bit like me, so you have mechanical trading strategies, or perhaps you're a discretionary trader, but you have a fairly fixed method that works for you in the markets. Well, either one of those two methods will at some point have quite a few losers in a row and the performance will decrease slightly. The key is to recognise whether that performance is just a regular pullback or decrease in performance, or whether that method's actually stopped working completely. And you need to recognise this so you don't continue to trade it and continue to lose money. The method that I'm going to show you to combat this problem is a method of using a moving average, but it's not your normal moving average, not the normal moving average you see on a price chart. What we do is we actually apply a moving average to our own performance curve or equity curve. I don't take credit for this method, but I do take credit for using it. It was something I learned from Larry Williams, and I actually done a video on this a few years ago, but in today's example, we're going to look into it a little bit deeper. And we're going to use a real life example of a strategy that I used, one I created and I actually traded for 2 or 3 years before performance decreased and I had to stop trading it. Because unfortunately, strategies can and do stop working at some point or another. Hopefully, they don't stop working after a month, they don't stop working after a year. The longer they work, the easier it is for us. And as you can see, I actually messed up a little bit here in my own trading, my own strategy, because it was doing so well for quite a few years and then it stopped working and I continued to trade it even when it was stopped working. I should have stopped trading it a little bit earlier, but all will become very clear. I'll take you over to the screen and we look at it in more detail to get a real visual representation of exactly what I'm talking about. Now we've moved over to the screen, I can show you the strategy and then we can apply that moving average to the equity curve and show you how to use it. The strategy, whilst not really important for this video, I'll just tell you a little bit about it. It's a trend following strategy on dollar yen that I developed way back in about June 2016. We'll have a look at the equity curve and see what the performance was like. The first equity curve that we're going to look at is from 2008 through till the end of 2018. Now, why are we looking at that? Well, because I developed the strategy using data from 2008 through till probably about 2016 when I first developed it, back in 2016. But I'm going to take it right up to the end of 2018 because that's when the strategy was working very well. So we'll look at that on the screen now. And there's the equity graph. We can see far left hand side is 2008 right the way through till the end of 2018, and I think you'll agree that it's quite a nice equity curve. What I'll do is we just quickly look at about June 2016, which is around about where my pointer is now. In fact, we can quickly just zoom in and show you what the curve actually looked like from the date which I started trading it right through to the end of the top right up here, which is 2018. And you can see I was trading it for a good 2.5 years, making some really nice profits. It was doing particularly well, no nasty drawdowns. And in the next chart, we've got data right the way through till the end of August 2019, which is actually when I stopped trading this particular strategy. So before we saw up until the end of 2018, and now we're looking at another 8 months on. So that's what we can see right at the top of this chart here. The peak was about January 2019, and then it literally went downhill all throughout 2019 until the very end here where I stopped trading it, which was in August 2019. And as you're going to see when we apply the moving average to the equity curve that I probably hung on and traded that a little bit too long really for maximum performance. If we just check the annual period analysis, that will give us an idea of what the annual returns were like, and we can clearly see, look, 2019 was just a bad year. This strategy was developed in 2016. I traded it through half of 2016 all the way through 17, 18, it made money, but then 2019 was that bad period. Remembering this chart then, what we do is we move over to a spreadsheet where I calculated and put a moving average on the equity curve of this particular strategy. So remember this chart and we'll replicate it over in the spreadsheet. And here's that same chart replicated in a spreadsheet, and the blue line is the equity curve and the orange line is a 50 period moving average. Now this is something that's quite simple to do within the spreadsheet in Excel. You're just calculating the average of the last 50 trades. Notice that it's not actually days or not actually weeks. We're looking at 50 periods as in the last 50 trades. And yeah, like I say, ever so simple to put on there. But what I want you to look at is, look at here where the blue line crosses below the orange line. So the blue line is our equity curve and the orange line is our 50 period moving average. We treat this just like we would if we were trading a moving average on a price chart. The idea is here, the minute that the actual equity curve drops below that moving average, we cease trading. And what I've actually shown here is trades right up until August, in which the far right hand side of the chart where my cursor is, that is where I stopped trading it. So I actually left it trading a little bit too long, didn't I? I didn't get out right away, because sometimes if we look back here, you know, it can be a little bit choppy, as with a normal moving average crossover on a price chart. And I thought I'd give it the benefit of the doubt. Don't forget, I'd had 2.5 years of this strategy making me money, and I suppose I was slightly attached to it, thinking it's been a really good strategy up until now, let's keep it running. But got to August, enough was enough. I should have got out a little bit earlier. I should point out that the point in which that crossed the moving average was about May, or the end of May 2019. So I continued trading the strategy for a few months longer than perhaps I should have done. So I hope it's clear what I've done here. I've literally taken the equity curve, trade by trade, of one particular strategy. Now don't forget, you shouldn't be trading just one strategy. I have a portfolio of many of these strategies. So I do this individually over each and every strategy. So you can see it's equity curve of the strategy. I've applied a moving average, ever so easy to do in a spreadsheet. And when your equity curve drops below the curve of that moving average, maybe it's time to quit, because we don't know if that's just underperformance or this strategy could just go completely south now and have stopped working for whatever reason. I don't know, but I do want to know when it stops working so I can cut it, stop applying money to this strategy, put the money into other strategies that are working better. Hopefully that's clear. This next chart that we see is exactly the same strategy and exactly the same moving average. What it is, it just shows more data, and it shows data right up until the current day in which I'm filming, which is in March 2020. And we can see that the equity curve actually crossed above the moving average ever so slightly, and then it's hovering around it. So in fact, this strategy could actually recover, and if the equity line starts ploughing on, going above the moving average, then there is a chance that I will apply money and start trading this strategy again. So it works both ways. It's a signal to say, turn it off, enough's enough, or actually, no, the strategy is not dead, it's working again. So let's turn it back on, let's apply some more money to this strategy. And here's that same chart that we've just seen in multi-charts. This is data right up until 12th of March 2020. So we can see the same thing again, and we can see that little peak where it almost looks like it's starting to recover. I'll keep a close eye on this in the coming months to see how the performance carries on. Obviously, I'm not applying my own money to it at the moment until or if it actually starts to recover. Well, that's about it for this video. I hope you found that interesting, and I hope you're going to put that method into action within your own trading, so you can monitor and keep an eye on each and every one of your strategies just to make sure that it's not actually broken. Like you saw in that video, I probably continued to trade that strategy a little bit too long, but like I said, it'd been making money for a few years and I just wanted to keep it running. Luckily, most of my strategies do continue to make money and it's rare that I have to turn them off. Interestingly though, I do have another strategy that I've since turned off. Yeah, that was on dollar yen too. Again, similar sort of scenario. It was making money 2017, 18, 19, just stopped working, just started declining. However, I keep an eye on them, keep looking at them every month, and the performance has suddenly started to work again in 2020, even in these wild, volatile markets that we're currently seeing in this month of March. I hope you liked the video and I hope you got some value out of it. If you're interested in my style of trading, which is mechanical, rule-based trading, then why not check out my trading course? You'll find the links to that down below. And if you've got any comments or questions about how to apply this moving average to your equity curve, then leave them down below or email me, jared@thetransparenttrader.com. If you like the video, please give it a thumbs up and subscribe because it helps the channel grow. Until next time, this is Jared Goodwin, and thank you.